Hey, good afternoon, ladies and gentlemen. Welcome to the 16th of June, a weekly market review. As usual, today I have with me Gerald. How are you, Gerald?
Hi, Sunny. Hi, everyone who has joined us in today's weekly market review. So we are now into the second half of June. June is typically quieter because of the school holidays. And also there isn't any major earnings report during this month. But we have still seen quite a lot of developments in the financial markets, both on the geopolitical front as well as on the macroeconomic front. So hope to be able to share some of these updates today.
Yes, so going into last week, we were expecting the CPI data, which come in cooler, so that's a good news. But things that were unexpected was the tension between Iran and Israel actually heats up with some sources saying that Israel is hitting some of Iran's nuclear facility. That caused a spike in oil price, and in the later part of last week, markets actually pulled back because of that. And of course, we have some not so happy news, some sad news that Air India has a crash, which SIA is a shareholder of. And of course, the spike in oil price doesn't help SIA performance. And then we also have Jetstar leaving our Singapore market, so we got less destination to travel to. So with all this happening, I think I'll let Gerald take you through the details.
Sure. The usual disclaimers that today's sharing is not seen to be financial advice, and you should consult your own financial advisor before buying or selling any of these securities. If you would like to help us leave a review on Google, you can scan this QR code or go to the website bit.ly/SIAS review. If you would like to join SIAS as a member to access various online resources or investor education programs, you can also scan this QR code. Okay, so in the past week, we actually started the week well, but the major indices actually ended the week lower. We see here S&P 500 is back to below the 6,000 levels, and the STI also had a weekly loss of 0.6%. So this is really driven by the geopolitical developments that came out, especially later in the week, with the escalation in the Israel-Iran tensions. If we were to look at the news around the US-China trade talks, they were mainly positive. So what came out is that US and China had reached a preliminary agreement to be easing some of these trade tensions. So as part of this agreement, China will ease some of the rare earth export restrictions, while the existing tariff will actually stay. So I think with this, Trump described the deal as being done pending the sign-off from himself as well as Xi Jinping. But I think at this point in time, what they would actually perceive the agreement is that this is just a framework and it's actually not final. So this extends until the 10th of August, and this allows them time to work towards a more comprehensive agreement. In terms of the economic data, we also have the inflation data that came out. We see here that the US core inflation actually eased in the month of May. Okay, so while there were concerns that with the tariffs, we'll see a spike in inflation, but that didn't actually come true. In fact, we saw inflation actually slowing down in the month of May versus the month of April. At the end of the week, what actually came out was an escalation in the Israel-Iran tensions that actually led to a very sharp spike in oil prices. So what we see here would be that effectively from about $60 per barrel, it went up to $73 per barrel within a very short period of time. So that is still an ongoing development, and we will see how that continues to impact the financial markets. In terms of the top performers, we have some of the names here, which are the Jardine-related names. So Jardine Matheson, Hong Kong Land, DFI Retail Group, actually having some gains in the past week. We also got Venture Corp, which was previously seen as being impacted by the trade tensions. And with the US-China agreement, we see it recovering by 2.6%. In terms of the worst performers, we have got SIA down by 2.1%, sets down by 2.9%. So some of the transport-related names actually being impacted because of concerns around the escalation in Israel-Iran tensions. So the name that I wanted to share more about today is SIA. Effectively, we have seen the share price recovering after they announced the full year results. But with some of the developments over the past week, the share price has actually come down, and we saw it being one of the not so well performing stocks in the past week. So just as a quick recap, what actually came through from the most recent earnings, it was actually slightly better than expectations. So if you were to look at the second half of the year, even though the operating profit came down, it was not as sharp a decline compared to what some investors feared. So this is what we see in terms of the group net profit. In the fourth quarter, they actually had a group net profit of about 410 million. So this was slightly down compared to the previous year as well as in the third quarter. But overall, it wasn't a very sharp decline. And that actually helped to ease some investor concerns that as the post-COVID travel boom actually start to ease, they will actually see a sharp deterioration in their net profit. Okay, so if I were to look at the revenue for SIA in FY 2425, which is the year ending March 2025, actually the revenue has continued to be fairly healthy. In fact, in the full year for FY 2425, it actually grew by 2.8%. And in the second half of the fiscal year, it was up by 2% as well. Okay, so the revenue remains to be fairly robust, and that actually led to SIA reporting the highest ever full year revenue in the fiscal year 2425. Okay, if I were to look at the group operating statistics for the passenger traffic, actually that continued to show robust growth of 6.4% in the fiscal year 2425, and that actually helped to support the revenue growth. Okay, what actually impacted the profit is then the sharp increase in total expenditure. They had to increase the expenses because of some of the capacity growth as well as the cost escalation. So if I were to look at the full year, that increased by 9.5%, and the second half that grew by 5.2% compared to the previous year. Okay, so while we saw the revenue actually going up with the increase in the group expenditure, we actually see that the net profit actually came down in the second half of the fiscal year. Okay, so if you're wondering where some of this expenditure actually came through from, a lot of the expenditure for an airline would be the fuel cost. So that represents actually still close to 30% of the group expenditure, which is why with the sharp increase in oil prices, there are concerns that it will impact SIA's profitability. Some of the other big cost components would be, say, the staff costs, which increased by 6% compared to the previous year. Okay, so what is important to note about SIA is that it has a hedging policy towards its fuel cost, and this will help to potentially mitigate some of the impact from the increase in oil prices. So it's not that if the oil prices increase by 20%, the fuel cost will directly increase by 20% because they will have hedged some of their fuel cost exposure. So this is what we see in terms of the exposure. Definitely it'll be more well hedged in the first half of the fiscal year 2526, and then that actually starts to wind down towards the second half and into FY 2627 as well as the years beyond. But it's still worth noting that they have had some opportunistic long-term hedges to extend the hedge profile up to 5 years. So that may still help to mitigate some of the increase in oil prices. Okay, so overall, we see that for the full year, Singapore Airlines actually reported a full year dividend per share of 40 cents. So that was actually seen as a positive, given that that translates to a fairly healthy dividend yield for SIA. I think with the news about the exit of Jetstar Asia, that also led to questions around the landscape that we are seeing for the aviation industry. So this was something that the SIA CEO addressed at the full year results as well, in that they do see some of these challenges faced by the aviation industry, whether it's intensifying competition, supply chain disruption, cost inflation, geopolitical tensions, climate change, and more recently, macroeconomic volatility. But what they noted is that these challenges are industry-wide and not unique to the SIA group. So I think in the same way that Jetstar Asia would see some of these challenges, SIA would actually see some of these challenges as well. Okay, so how is SIA actually mitigating some of this impact? I think to be able to deal with the macroeconomic volatility, that is where they see having a diversified network as being important, because then that allows them to capture flows in global passenger flows, as well as quickly adapt to changes in the market trends. So what we see in terms of SIA is that in terms of the exposure across different routes, it has got a fairly diversified exposure. And what we see here is that if I were to look at the routes, Southeast Asia, Asia would be its key market. But at the same time, it's got routes that go to US and other parts of the world as well. Okay, and if I were to look at then the addition of Scoot, which is low cost arm. So what we see here is that that further strengthens its footprint in Asia by adding additional routes. So for example, if I were to look at Southeast Asia with the addition of Scoot, that increases its flights weekly in a very significant way. And likewise for the North Asia as well as Southwest Pacific. So overall, what they believe is that the group network is well diversified, which actually helps to enhance the business resilience. Okay, so this is where actually its partnership strategy actually comes in, because some people may ask, why does it actually have a 25% stake in Air India? So that is really meant to be able to tap on some of these partnerships to be able to bring its customers to anywhere in the world. So apart from Air India, it's got 121 airline partners, 33 of which are code share partners, and that allows it to fly to 253 additional destinations. Okay, so I think one question that we often get is around the dividend yield of SIA. I mentioned earlier that it announced a 40 cents dividend in the previous fiscal year. So based on its current share price, that actually translates to a current dividend yield of 5.8%, which is above the historical average and also above the average for the Straits Times Index. Okay, so that is my sharing on SIA. Some of the other things I'll be keeping a lookout for. I think the main development this week is really the Fed interest rate decision. Based on the current expectations, investors are not expecting the Fed to be cutting the interest rates, but we all want to be having a understanding of how the Fed sees some of this latest tariff development and what it means for its rate cut cycle in the second half of this year. So with that, I'll hand over to Sunny, who will share more on the technical analysis.
Hey, thanks, Gerald, for that in-depth coverage on the latest business update on SIA, which is very timely because we could be facing some of headwinds, some challenging headwinds, especially the unforeseen ones with the escalation of the tension between Iran and Israel, which is the spike in oil price that caused some global concern because that could reignite inflation. And of course, those names that will be impacted the most could be the airlines, which is a typical playbook. When oil price rises, usually airlines and airlines-related counters, SIA sets, will be impacted. So let me do a roundup on the indices as a whole. So from what we see, the news flow coming through last week, we got some encouraging news on the inflation side in the US. And then after that, later part of the week, we got that escalation in geopolitical tension that caused market to pull back due to the spike in oil price. On Singapore side, you can see that some of the news that make the Singapore headlines was the SIA Air India crash. That was one negative thing. On top of the oil price issues, on top of Jetstar leaving the airline industry, Singapore marketplace, that also caused pressure. So STI actually dropped by about 0.5% for the whole of last week. And you can see that early this morning on Monday, STI index is up. It's also down close to about 0.5%. Okay. So all three Singapore banks are also down slightly more than 0.5% due to the geopolitical tension that caused the oil price spike, which is not good for the economy as a whole. Okay, so STI index is still within the range of the Bollinger Band, as we can see over here. Last Monday on 9th of June, we see that it actually challenged the upper bound of that Bollinger Band, which is very close to the high that we saw on the 13th of May, that the peak of the rebound that we saw in April. So that caused markets to take some profit and then pull back a little, coupled with the bad news, the oil price spike that we hear later part of last week. So the STI index actually pulled back quite a bit. It is now slightly below the 20 days moving average of 3,904 points, currently below the 3,900 handle at 3,894. And we are looking at support coming in at least on the 100 days moving average, which is 3,851 points, which is the amber line that you see here. Okay. So this line is coinciding with quite a few key support levels. The lower bound of the Bollinger Band at 3,866, as well as the 50 days moving average at 3,819. Okay, and if this level were be unable to sort of stabilize the STI market, then with the 200 days long-term moving average might be trending upwards to come around support around the 3,800 level. The 200 days MA now at 3,759. Okay. On the MACD indicator, we can see that it is now in a negative reading, signaling that negative momentum is present now in the STI index, and hence more downward pressure is expected. The RSI has also dipped significantly from last week reading of about 65 to this week reading of about 51. So we are on the verge of breaching the 50-point neutral mark on the RSI indicator. And if that happens, that usually indicates that we might go into a further downtrend or further downward momentum coming in to push the index down. Okay. So with all these risks present, I think we should be more cautious. So let's take the 50 days moving average at 3,819 and even the 200 days moving average at 3,759 as some of the key support level that we should look at. Okay, so let me just draw that area for you. Okay, so somewhere around this area that we could see support coming in. So the average around this level is the 3,800 handle. That is where I foresee the STI could see some support coming in at 3,800 points reading. Okay, that's on the Singapore side. Next, let's move on to the US indices. Let's start with the Dow Jones Index. So you can see that the market was actually trending up in the US for the past week until we saw that news of the escalation in Israel hitting some of Iran's nuclear facility and then the retaliation that was expected. So this caused the market to drop more than 1% for all the US indices. So we gave back a lot of those gains that we saw in early part of the week on the US index. So with this pullback, the Dow Jones has hit below the 200 days moving average at 42,502 points. We are now at 42,197 points. And the next support level will be these two levels that we are looking at, the lower bound of the Bollinger Band at 41,677 points, as well as the 50-day moving average at 41,166 points. So the lower inflation reading was actually a positive news for the US market, at least, because it shows that the inflation reading is not impacted yet or so far by the US tariff that is ongoing. Okay, so it haven't shown signs of pushing inflation upwards. But then with the 7% spike in oil price last week, that also caused inflation to become, investors to become worried that, hey, this could be another thing that could ring inflation again. Hence, market is not taking that positively. And the latest forecast or the latest reading that we see on the CME Fed Watch 2 is that the earliest rate cut could only come in September. So we are still about 2 months away before that announcement. And the Fed decision or the announcement this week will give us more insights on how Fed look at these issues that are arising. Okay, so the indicator wise, MACD negative, so we expect more downwards momentum. You can see a very sharp drop in the RSI indicator now to the 50-point neutral mark. And if we go to sub 50, that would mean that we could see further pullback in the US index. So investors looking at the Dow Jones index, the top 30 companies in the US will have to be more careful and look at the lower support level of the 50-day moving average at 41,166 points as the key support for the Dow Jones index. Next, let me move to the broader index of the S&P 500. Okay, same thing. Last Monday we had that we have a rise in the indices throughout the week, except until on Friday. That's where we see a pullback. But good thing for the broad index is that we are still above the 200 days moving average. So the S&P 500 near-term support will be the 20 days moving average at 5,944 points. And then with further support coming in around the lower bound of the Bollinger Band and the 200 days moving average at 5,806 points. Okay. Indicator-wise, actually S&P 500 has been sort of the MACD is not showing any kind of an indication or direction of where the S&P 500 index is moving. But we can see from the moving averages, it's trying to track the 20 days moving average as a key support level. So with that coming down, that could provide a bit of support for the S&P 500 index as well. But with all those risks that we are seeing right now, and then you can see that the RSI coming very close to the 70-point overbought level and have a pull down last Friday. That could signal that, hey, the recent uptrend that we are seeing, or the mini rally that we see in the last 2 weeks, is coming to an end, and market is likely going to go into a consolidation move. So 5,800 would be my support for the S&P 500 index if you would like to accumulate further. Next, let's move to the tech-heavy Nasdaq Composite Index. Actually, most of the tech stock actually pulled back, especially the Max 7 stock, except for Tesla, because there was some news that regulations could be ready to push out the FSD, the full self-driving capabilities of Tesla. So there were developments there. So except for Tesla, I think most of the Max 7 stock actually went down. The big tech stocks went down. Okay, so this is in line with market movement. We are trending very tightly in a narrow range for the past 2 weeks. But then that spike in oil price actually pushed most of the indices down. That includes the Nasdaq Composite Index. And then the next support level, if I'm taking reference from the low bound of the Bollinger Band at 18,758 points, with the 200 days moving average at 18,555 points. Okay, so both in MACD is showing negative reading already. RSI is trending down. Hence, investors would want to get some exercise more caution when getting into some of the major US index. So S&P 500, my first support level would actually be the 200 days moving average at 18,555 points. Okay, so this is my roundup on some of the indices performance. And this week we are looking at the FOMC decisions. So what are the other things that we would need to look out for, Gerald?
Yes, like you mentioned, it's really about the FOMC decision and also developments around the Iran-Israel tensions. I think those are the two key macro developments that I will keep a lookout for to understand how the financial markets will perform.
All right. Okay. So a lot of some headwinds might be coming in, but the stock market always rewards the brave and the patient. So these could be opportunities to get back in on some of the counters that you're looking at. So in the meantime, do stay safe and trade safe, and we will see you again next week in the next market review. Goodbye.
Thank you.